Welcome back. A sinkhole at New York's LaGuardia Airport leading to a number of delays and cancellations over the long holiday weekend. That news leaving travelers frustrated, but our next guest says it's a sign that one area of the market is actually set for some gains, specifically the airports. He says it's one of the top areas for opportunities in the Muni space. Mark Paris is Invesco CIO and head of municipals here on set with me. Welcome.
Thank you, Kelly.
Why are airports such a big opportunity right now?
Yeah, so I think there's a lot that airports bring to investors. First of all, origination and departure fees, gate fees. Think about concessions. You know, a lot of people complain that these airports are really long and they have to walk. They used to have a lot of moving sidewalks. Not so more. They want you to buy things while you're waiting for a plane.
They've gotten rid of the moving sidewalks so that you buy more? Oh, come on.
A lot of places have. Absolutely. And so, you know, what we find is that these are great investments. They have high days cash on hand, so that's really good for the credits. They're usually rated A or better, and even the weaker ones, I think you find that when you do the math, when you do your research, you know, you go to a lot of cities right now, the cities can be sleepy, but the airports are extremely vibrant. So we found great investments in airports. We think that spreads are going to continue to tighten, and yields are very attractive.
Munis have done reasonably well this year. I mean, maybe you can quantify it for us. As I understand it, they've outperformed corporates and even the treasury market.
Yeah, so flows have been fantastic into the muni sector this year. After a couple of years of lackluster flows, a couple of years of rates moving around, munis are getting a good amount of money coming into bonds, and that's been really good. While supply's been high yield supply's actually been very low in the muni market. And so we actually think that high yield municipal bonds, startup hospitals, charter schools, continuing care, living facilities, those have really been a good opportunity for investors. But yields in general are just very high. And when you look at like a 4% yield on a 20-year muni bond and you gross that up, that's pretty significant returns for investors.
What would that be, like 7-8%?
It depends on what tax bracket you're in, but absolutely, you're looking at almost equity-like returns.
Right. So you mentioned startup hospitals, charter schools. I'm just curious, what would their borrowing costs typically be on the other side of that? So again, investors in these spaces would be able to capture what might be an incredible, I mean, if we're talking 10% on a tax equivalent basis, that's wow. Obviously, it comes with a high default risk, but what kind of number is typical for those areas?
So you could hit 5%, 6%. A lot of high-yield, long municipal bond funds right now are yielding in the mid-5s, and that's because you're buying 5, 6, maybe even 7% deals. But you want to make sure that you have a good security package. You want to make sure that you know, you have a debt service reserve fund, a good cap I in the bond, and then you know, when you're investing in the bond, you do constant surveillance on that bond to make sure that the demographics work, the credit works, what competition is going on. So there's a lot of factors that go into it, but yields are very high right now in both high grade and high yield municipals. Interesting.
You mentioned that there's been a lot of inflows, a lot of money coming into the muni space. Where's that money coming from?
Yeah, so it could be a variety of factors. We're certainly seeing some changes in the private credit market. Obviously, the equity market is very high. Tremendous amount of money market bonds right now, and if you're getting 3.25, 3.5 in a money market fund, you know, why not go out on the curve? We love the 20-year part of the curve right now in munis. That's right around, like I said, 4%. It's about 80-85% of what you get on the long end. And then in high yield munis, it's a much flatter curve, so you can actually get that 5-6% yield in a shorter high yield bond. We think that helps on the duration front, and also, you know, clipping that coupon right now is a big deal.
But that's interesting. You think that some of the problems with private credit, maybe investors a little less comfortable there, could send them into something that's financing, again, a charter school or a startup hospital, but through the muni space.
Yeah, I just think muni flows have been low the last few years. We're seeing a pickup, and it could be from a variety of different sources, but that could be one of them.
Quickly, you mentioned airports right off the top. What else is at the top of the list for you right now that's attractive?
Yeah, so look, I think with higher you know, oil prices, everybody's worried about things like toll roads, but remember that municipalities use the essential services. Water and sewer bonds aren't affected by oil prices. You know, you've got schools, you've got hospitals. So we think that you do a broad amount of research and you buy good, high-quality bonds. You clip that coupon. We think rates are going to kind of stay in a range right now, and that's a great time to clip that really high coupon.
And I watched the miles traveled data. It still looks fine. It doesn't really show much of an impact for those toll road holders. Mark, thanks very much. Mark Paris from Invesco today. That's it for us. Thanks for watching The Exchange, and I'll go join Brian Sullivan for Power Lunch right after this break.
Muni Money is sponsored by BAM. Help build America's future with BAM-insured Muni bonds.
America is built with perseverance, resilience, and determination. And you can put that strength to work in your portfolio with BAM Mutual Insured Bonds. BAM protects municipal bond investments that finance the backbone of our country. You'll invest with the confidence of an added layer of security and guaranteed income you can count on. Invest with strength. Build a stronger tomorrow with BAM Insured Bonds.